What's going on, money lovers? Welcome back. So today I'm going to give you a way that you can easily outperform the market, make instant cash flows, and this is a great, pretty easy to use strategy. You can learn very quickly how to do this. And if you enjoy this video today, please don't forget to like, drop me a comment below if you have any questions, and hit that subscribe button. So let's get started. So if you're like me, you're probably seeing every day the market hits all-time highs. Maybe your portfolio is not hitting all-time highs. I know mine isn't because I have a lot of exposure to companies like Tesla, which if we look at the chart here, you can see Tesla has kind of been stuck in this range for the last year where it hit a high of 900 and now it's just been trading sideways. Same thing with another company I like Palantir, largely just trading sideways. SoFi stock, same thing. These are three companies I'm very bullish on long term, but in the short term, they're not matching the S&P 500 returns. So many of these high-flying stocks are kind of stuck in a range. So today I want to talk about a way that you can keep up with the market and even get ahead pretty easily. So today we're going to be talking about options and specifically selling puts. I'm going to keep it very simple today. There are a lot of different strategies you can use with options, like selling covered calls as well. But today we're going to do the basics. I'm going to talk selling put options, and I'm going to show you a few examples and trade some live options right here in a minute. And this is a way that you can instantly make money. You can add a few percentage points to your portfolio's returns each month. And if you add that up, 1 or 2 extra percent a month, you're talking an extra 24% potentially at the end of the year, maybe even more. So that will enable you to outperform the market pretty easily. And what I like about selling puts specifically is you get instant cash flow. So the way options work, an option is a contract. Let's pull up the option chain here. So here's SoFi stock. So if I were to sell a put option on SoFi stock at $15, so a $15 strike price, that means I'm required to buy the shares if it goes to $15 or below. So all options are contracts that you're either buying or selling. I like to sell my contracts about a month out. So let's go to November 5th. So if we go to November 5th, that's 32 days out. And if we look at this $15 strike price here, if SoFi were to go below 15, I have to buy the shares. And each contract is 100 shares. What I like about selling puts versus buying calls or buying puts, when you sell put, you get paid the premium. So as we can see here, the premium is 71 cents. So you multiply that by 100 because every options contract, remember, is dealt in 100 share increments. So I'm going to click sell to open here. I'm going to do one contract, market, and place. So I just made $72 minus the 65-cent commission. So I walk away with $71.35, just like that. A few clicks of my mouse. So as long as SoFi stock stays above $15 over the next 32 days, I keep that premium. If it were to go below $15, then I'm required to purchase those shares. If on the settlement date it's below 15, because that's my strike price, I would have to buy 100 shares. Let's do another one too. So if we look at Palantir stock, also go out 32 days. Palantir's down today. Another thing, these stocks that are volatile or have these big price swings up and down, the premiums tend to be a lot higher. So I'm going to play it safe though. And a lot of these numbers, the delta here and the implied volatility, give you an idea of how likely this option is to execute. Obviously, Palantir's at $23 right now, so if I were to sell a $24 put, I'm selling a put that's in the money, so it's going to pay a lot higher premium, but it's got a much higher chance of being executed. My goal here is to cash flow or acquire these stocks at a cheaper price. So if I sell the $20 put here, so we're going to sell one contract, and this one will get us $38. So now I just made $100 just with a few clicks of my mouse here. Not too shabby. And you can sell, more contracts than one. I usually, I like to only sell one contract at a time. I might stagger a few just so that I'm not all of a sudden having to buy, 500 shares of a company and get blindsided. Now, if you're not already impressed, let's look at a company like Tesla, which is highly volatile and thus pays very high premiums. So if I were to sell a put on Tesla, and again, it's never good to sell the puts when the stock is up on the day. It's good to sell calls when the stock is in the red. That's a good time to sell puts because as you can see, all of these premiums are down today because the stock is in the green. But just to give you an idea, if I were to sell this Tesla $680 put, I would make about $1,800 right now, just like that, because you're multiplying this number here by 100. Some other things to talk about here. Obviously, this is not without risks. You have to make sure you have that money in case your option does execute so that you have enough in your account to purchase those shares. A lot of the time, brokers will only allow you in the beginning to do cash secured puts, which is a good way to learn. That way you're having to put the money up. So if it does execute, it's okay because you've put the money up. So selling puts is great because it can allow you to wait out, get paid to wait out a stock until it gets to a cheaper price if you want to buy it for cheaper, and get paid in the meantime. So I like to use options to just get this monthly cash flow coming in. And so for example, like if I were to sell this, I have a Tesla $680 put open right now that I probably sold around the same range, $1,800 or $2,000. So I made $2,000 just like that. Now, if it were to drop, yes, there are risks, but there are other options that you have when selling puts. Here's some examples. So if we look at the Tesla put I had sold here with a strike price of $680, you can see I could cash out right now for a 70% gain, so not get the full $2,000, but take home $1,400. And this is a great way to limit your risk. So you can close these positions out early, and a lot of the time when I'm up over 50%, I will close it out. So even though I won't get this full $2,000, I can close it out, pocket this money, and that's it. And I don't have to worry about, if Tesla were to drop $100 and all of a sudden I'm in the territory where I possibly might have to execute this and buy 100 shares of Tesla. So there's two things on your side when you're selling puts. You can close the position out early when you're up whatever percent, really. I mean, it's more money than you started with, but I like 50%. It's a good benchmark for me. The second thing you can do is you can roll out your options further. So let's say the contract doesn't work out. You can roll it to a further date where you would basically buy to close that option and sell a new one. So you might break even, or you might be able to make a little bit. It all depends. So those are two ways that you can kind of help safeguard your options, but it's not without risk. Selling puts, if you know what you're doing, is a great way to generate some extra monthly income. And when you're starting out, one of the mistakes I made early on, I'm going to go back to Palantir here. I would get money eyes and look at these high premium options here, like the $23 one. I might have sold that because I could make $135 right now, but you're putting yourself at much more risk. If you want to own the shares at $23, that's fine, but just know there's a very good chance it executes. And even when you go for these safer plays here, anything could happen. It could execute, so having that money on standby is definitely key, because options will execute. There's going to be some surprises. Some company dips a lot or goes up a lot, and your options execute all of a sudden. So you got to make sure you have the money there to pay for that if it happens. But even when you're just starting out, even if you sell the cheap options, for example, like the $15 put is only going to pay $7. But start somewhere, and all of a sudden it's almost like getting a dividend from these companies. So that's another way you can look at it. It's a way to maybe make a dividend off companies that don't pay dividends. So I've been loving this strategy. It is definitely helping me. Like I said, market keeps hitting all-time highs. My portfolio is not hitting its all-time highs because I have so much exposure to companies like Tesla, Palantir, SoFi, which I think are great long-term. But that's just the way it is. It's a long-term game here. And in the meantime, I can sell some puts, make some extra money, use this money to, pay my bills, put it back in my account. So if this is something you enjoyed and you want to learn more about options, let me know in the comments below. Let me know if you have any questions, and I can make more videos on this. This is a strategy I utilize very often. I'm doing this more often than I'm buying stocks at this point. So if you enjoyed the video today, please don't forget to like, subscribe, and drop me a comment below. This is Vinny from the Investment Club, and I'll see you next time.